Time by Carrie Chris is 6 p.m. Time for CBX Business News. The business news headlines is brought to you by QMax Wealth Management, making more possible. Market warnings, regional growth stalls, and Eurozone shifts. Hello and welcome to CBX Business News for Friday, July 18, 2025. I'm Yanil Wood. Thanks for joining us. Coming up in the newscast locally, Morgan Stanley's Chief Investment Officer sounds the alarm on inflation risks amid rising tariffs. On the regional front, Prime Minister Brown urges urgent action to revive ECCU's stalled growth as Antigua and Barbuda takes the helm of the ECCB Monetary Council. And over on the global stage, the Eurozone's current account surplus shrinks just €1 billion in May, signaling shifting trade dynamics. Stay tuned as we unpack these stories and more right after this break.
Let's all get fit. This summer set drip. Hip dips and split. Power in the mind, let's get healthy with it. Sometimes the body's so hard, but the body wants it. And then your head is so home, and it's so like this. So we gotta go 1, 2, 3. One more now. 1, 2, 3. Let's go. One more now. 1, 2, 3. One more now. 1, 2, 3, go.
So much book you need for high school?
I'll show you how to make sure you have all the money for my books and even some extra. It's called budgeting, Dad. Making a budget is the most important thing you can do to track your money. It keeps a record of how much you make, how much you spend, where you spend it, and most importantly, how much you can save. Write down all your income, write down all your expenses, see where you can cut down and allot more money to more important things, like saving.
The local news is brought to you by Derriman Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses, and Pulse Investments. Welcome back to CBX Business News. We start with the latest developments shaping markets and the economy. Investors may be riding a wave of optimism, but underlying risks tied to tariffs and bond market signals have become hard to ignore. Despite investors appearing unfazed by the potential inflation impact of new trade duties, recent data point to growing vulnerabilities. Chief Investment Officer, CIO, and Head of the Global Investment Office at Morgan Stanley, Lisa Chalette, is urging caution in her latest weekly report, Big Wave, highlighting the need for a more measured investment approach. Pointing to potential risks, Chalette notes that the one-year forward inflation swap is pricing a rise in inflation over the next 12 months.
Our enthusiasm around the bull case in 2026 remains more muted. For starters, there's the bond market disconnect. While equities seem to be dismissing inflation threats from tariffs, bond markets suggest that trade taxes do remain a risk. Specifically, inflation swaps are pricing a rise in inflation over the next 12 months from tariffs to 3.3%. Meanwhile, the US dollar has depreciated 11% since January, and a weaker dollar will only magnify these tariff impacts. Likewise, on growth, treasuries do not appear to embrace the reacceleration narrative that equities seem to be holding on to. Since the passage of the One Big Beautiful Bill Act, 10-year real rates have stayed anchored around 2% in a tight range that they've traded at since last Halloween.
The Morgan Stanley CIO also highlighted additional indicators pointing to growing instability within the bond market.
Also, the 10-year term premiums have been consistently expanding since Election Day and are now up 15 basis points since the tax bill's passage. This reflects genuine demand for compensation for the future risk of debt sustainability. Beyond these bond market dynamics, we also question predictions of a CapEx-driven productivity boom that will drive margin gains. Certainly, spending related to generative AI has been strong and may continue for some time. But this trend, we believe, has long been priced, and new tax incentives will add little incrementally. Also, whether the new tax law will actually stimulate additional CapEx is in question, given that capital spending has already been extremely strong since 2021.
She recommends several portfolio adjustments investors should consider to navigate these risks.
So at this time, with continued policy uncertainty and compressed equity risk premiums, we prefer listening to the bond market and being stock pickers. It's time to contain our enthusiasm and re-anchor to reality as opposed to the best possible case. Consider stocks with potential for upside earnings surprise and cash flow among select tech names and others in financials, industrials, energy, and parts of healthcare that are policy beneficiaries. But avoid the overhyped themes and look to complement all of this with diversifying positions in international equities, commodities, energy infrastructure, and hedge funds.
Chief Investment Officer and Head of the Global Investment Office at Morgan Stanley, Lisa Shillette. Jamaica's total import expenditure increased by 1.6% during the first quarter of 2025, while export earnings fell by 1.9% compared to the same period last year, the Statistical Institute of Jamaica Statin has reported. In a release earlier today, Statin noted that import spendings for January to March reached US $1,893.8 million, up from $1,864.5 million in the corresponding 2024 period. This rise was largely driven by higher imports of raw materials and intermediate goods, which increased by 6.4%, alongside a 9.8% growth in consumer goods imports. Meanwhile, export revenues declined to US $485.2 million from $494.8 million in the previous year. The decrease was mainly attributed to a significant 34.8% drop in mineral fuel exports. During the quarter, Jamaica's top 5 trading partners for imports were the United States, China, Brazil, Nigeria, and Japan. Imports from these countries rose 9.4% to US $1.19 billion, largely due to increased purchases of manufactured goods and mineral fuels. And on the export side, the leading destinations were the United States, the Russian Federation, Iceland, Canada, and the Netherlands. Export earnings from these markets grew by 5.6% to US $363 million, driven primarily by higher exports of crude materials. And 100 entrepreneurs from Kingston, Clarendon, and St. Catherine have received support for their small businesses through special entrepreneurship grants under the Local Economic Development Support Program, LEDSP. Since its launch in financial year 2021-2022, the Social Development Commission, SDC, has awarded $46.6 million to over 1,000 small businesses. Another 250 grants are expected this financial year. Recipients are selected through community nominations involving members of parliament and civil society groups. The recent grant ceremony was held on July 17 at the Ministry of Local Government and Community Development. In his address at the ceremony, Minister of Local Government and Community Development Desmond McKenzie says the program has allowed hundreds of Jamaicans to become the masters of their own destiny. With local government and the SDC, Mr. McKenzie said they have contributed to the reduction in unemployment because of programs such as this, where thousands of young and middle-aged people from small communities have been able to join the band of many Jamaicans who have gained meaningful and long-standing employment. He urged the beneficiaries to use the grants to expand their businesses with the aim of providing employment to others in their communities. Now to foreign currency trading news. At the end of currency trading on Friday, the US dollar is selling for $161.22, the Canadian for $117.29, and the pound for $217.07, while the going rate for the euro is $190.36. And from BOJ, we go to JSE for trading news. 95 stocks traded on the JSE Friday, of which 36 advanced, 36 declined, and 23 traded firm. Leading the winners were Main Event Entertainment, Epley Limited 7.75% preference shares, Iron Rock Insurance Company, and R.A. Williams Distributors, while the losers were led by One Great Studio Company, First Rock Real Estate Investments US dollar, JFP Limited, and Kingston Wharves. The main index advanced by 474.89 points or 0.16% to close at 305,478.80. The junior market index also advanced, but by 30.38 or 0.90% to close at 3,413.16. Now to some company news. Image Plus Consultants Limited, IPCL, has announced that its board of directors has reached an agreement with Dr. Werner Reed to acquire the assets and brand of the Woman's Place, TWP. Founded and led by Dr. Reed, TWP is a Jamaican company incorporated and domiciled locally with a strong reputation in medical imaging services since 2006, particularly in mammography. The company has demonstrated a consistent record of solid financial performance. CEO of IPCL, Kisha Anderson, says this marks an important step forward for their business. In all the corporate developments, NCB Financial Group NCBFG has advised that an agreement has been reached involving its Jamaican subsidiaries, NCB Insurance Agency and Fund Managers, and Guardian Life Limited GLL for the transfer of NCBIA's pension fund portfolio to GLL, along with the associated support functions. In today's market education feature, we're exploring the concept of trade liberalization. Trade liberalization refers to the removal or reduction of barriers that restrict international trade. These barriers can include tariffs, such as import duties and surcharges, or non-tariff measures like licensing rules and import quotas. Supporters of trade liberalization say it promotes lower prices for consumers, boosts economic efficiency, and drives overall economic growth. However, critics warn that opening up markets can lead to job losses in certain sectors, as cheaper imports may outcompete local industries. They also raise concerns about product quality and safety, arguing that some imported goods may not meet rigorous standards applied to domestic products. By contrast, protectionism takes the opposite approach, using high trade barriers and strict market controls to shield domestic industries from foreign competition. And that's it for Market Education feature and the end of the local segment. Please stay with us. The regional business news is up next. The local news is brought to you by Derriman Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses, and Pulse Investments. Welcome back, and now to news from across the region. As Antigua and Barbuda takes over the chairmanship of the Eastern Caribbean Central Bank ECCB Monetary Council, Prime Minister Gaston Brown has issued a powerful call for urgent regional action to address the Eastern Caribbean Currency Union's ECCU's sluggish economic growth. Addressing council members and regional leaders at the handover ceremony held on Thursday, Prime Minister Brown noted that while ECCU economies are projected to grow at an average rate of only 3% in 2025 and 2026, this growth rate is significantly below the 7% target identified as necessary to sustainably expand the region's economic size over the next decade.
If we're to double the size of our economy over the next decade, clearly we have to exceed that 3% and to get up to the 7%. So this projection of 3% represents a call to action by all citizens, all residents within our currency union. Notwithstanding the vagaries and the vicissitudes of the global economy, we must now redouble our collective efforts to build resilience, to enhance our growth prospects, so as to ensure shared and sustained prosperity for the people of our region.
The Prime Minister also underscored the importance of collective responsibility in navigating global economic uncertainties.
If we're to double the size of our economy over the next decade, clearly we have to exceed that 3% and to get up to the 7%. So this projection of 3% represents a call to action by all citizens, all residents within our currency union. Notwithstanding the vagaries and the vicissitudes of the global economy, we must now redouble our collective efforts to build resilience, to enhance our growth prospects, so as to ensure shared and sustained prosperity for the people of our region.
Chairman of the ECCB Monetary Council and Prime Minister of Antigua and Barbuda, Gaston Brown. Regional airline Liat 2020 has signed a landmark partnership with Colombian company Blue Sea to launch charter flights between Antigua and Barbuda and Cartagena. The charter flights are scheduled to begin in September 2025 and will directly connect the Eastern Caribbean with South America, opening new avenues for tourism, trade, and business collaboration. CEO of Antigua and Barbuda Tourism Authority Colin James says the deal is timely and strategic as the region looks beyond its traditional markets.
The Latin American market is the fastest growing market in the world globally, and Colombia is at the forefront of that. So even as things get a little bit rocky in the traditional source market, it's so important that we look to expand, and so all our eggs are not in one basket, and Latin American market is a key one for us.
CEO of Antigua and Barbuda Tourism Authority, Colin James. In other news, the Bermuda government has announced a statutory increase to the island's minimum hourly wage effective September 1, 2025. Following recommendations from the Wage Commission, the minimum wage will rise from $16.40 to $17.30 per hour, marking a significant 73% increase. Minister of Economy and Labor Jason Hayward made the announcement while delivering the ministerial statement to the House of Assembly titled Advancing a Fair, Sustainable Minimum Wage.
The Commission has recommended that the statutory minimum hourly wage rate be increased in 2025 to $17 $1.13. This adjustment is not merely an incremental change, it is a vital investment in our society and economy. A minimum wage that keeps pace with the cost of living is fundamental to ensuring that full-time work provides a pathway out of poverty rather than trapping individuals in it.
Speaking earlier today, Minister Hayward says the planned increase to the minimum wage is expected to deliver tangible benefits to thousands of workers.
It is anticipated that more than 2,500 workers will benefit from this adjustment, primarily those in service and sales sectors. These workers include individuals employed in hotels and restaurants, retail workers, personal care workers, cleaners, beauticians, and domestic workers.
Bermuda's Minister of Economy and Labor, Jason Hayward. And from Bermuda, we go to Trinidad and Tobago for trading news from the TTSE. 21 securities traded on the TTSE Friday, of which 5 advanced, 8 declined, and 8 traded firm. Leading the winners were the West Indian Tobacco Company, National Enterprises, First Citizens Group Financial Holdings, and National Flour Mills, while the losers were led by Unilever Caribbean, Grace Kennedy, Massey Holdings, and Trinidad Cement. Other results include the All TNT Index advancing by 1.26 to close at 1,486.70. The Composite Index advancing by 0.03 to close at 1,017.78. However, the Cross-Listed Index declined by 0.18 to close at 72.25. And still at 96.08 is the SME Index. And we go for a short break, but please do stay with us. The international news segment with Nielsen Rose is up next.
Welcome back, and thanks for staying with us. In the international news today, in May 2025, the Eurozone's current account surplus narrowed sharply to 1 billion euros, down from 7.3 billion in May 2024. This decline was driven by several factors. The services surplus fell to 16.7 billion, down from 22.2. The primary income deficit widened slightly to 34.8 billion, moving from 33.4. And the secondary income deficit increased to 11.9 billion euros, moving from 10.6 billion. On a positive note, the goods surplus rose to 30.9 billion, up from 29.1. However, on a seasonally adjusted basis, the current account surplus actually increased to 32.3 billion in May compared to 18.6 billion in April. Housing starts in the United States rose by 4.6% in June to a seasonally adjusted annualized rate of 1.321 million units, partially recovering from a revised 9.7% decline in May. This figure was broadly in line with the market projections of 1.3 million. Multifamily housing, which includes 5 units or more, surged 30.6% to 414,000 units, offsetting a 4.6% drop in single-family starts, which fell to 883,000 units. Regionally, growth was driven solely by the Northeast, where starts jumped 73.3% to 182,000 units, reflecting the region's concentration of multifamily unit developments. Declines were recorded in the Midwest, down 5.3% to 179,000. In the West, it was down 1.4% to 286,000. And in the South, it was down 0.7% to 674,000. Meanwhile, building permits edged up 0.2% to an annualized rate of 1.397 million, slightly above expectations of 1.39. Permits for multifamily units rose 8.1% to 478,000, while single-family permits declined 3.7% to 866,000. Regionally, permits increased in the South 4.4% to 775,000. However, it remained flat in the Midwest at 217,000, but fell in the Northeast 11.4% to 109,000, and in the West down 5.1% to 296,000. WTI crude futures climbed towards $68 per barrel on Friday, building on a 1% gain from the previous session as markets weighed escalating supply risks against lingering concerns over U.S. trade policy. Production disruption in Iraq's Kurdistan region caused by drone attacks cut output by 150,000 barrels per day, while Israeli airstrikes in Syria and broader regional instability added to market anxiety. Seasonal travel demand also supported prices, with global oil consumption averaging 105.2 million barrels per day so far in July, according to the surveys. Adding to the bullish sentiment, U.S. crude inventories fell sharply last week. However, gains were capped by uncertainty surrounding U.S. tariff decisions, which may not be resolved until after August 1, and expectations that major producers could soon begin unwinding output cuts. Despite the recent uptick, oil is on track for a weekly loss of over 1%. And now we'll take a quick look at some of the earnings roundup from the earnings season this week. We'll start with PepsiCo. PepsiCo reported better than expected quarterly earnings and revenue, reaffirming its full-year outlook. The company highlighted progress in its turnaround strategy following a previous guidance cut due to softer consumer spending and tariff-related pressures. Core earnings per share came in at $2.12, and organic revenue grew 2.1%, driven by international momentum and improved North American performance. Also reporting this week was Netflix, who posted a 16% year-over-year revenue increase in Q2, reaching $11.08 billion, slightly above Wall Street's projections. The company raised its full-year revenue guidance, citing strong subscriber growth and healthy ad sales. In addition, Charles Schwab also saw its earnings report coming out this week, and it saw profits surge over 50% year-over-year, fueled by a spike in trading activity and market volatility linked to U.S. tariffs. The broker reported earnings per share of $1.14 and revenues of $5.9 billion, both beating the market projections. New asset inflows totaled $80.3 billion, marking a 31% annual growth. And those were your international business stories. After the break, join you, Neil, for your recap.
Welcome back, and now to recap our top stories. In the local news, Morgan Stanley CIO warns investors of inflation risks amid rising tariffs. Regionally, Antigua and Barbuda assumes chairmanship of ECCB Monetary Council. And on the international scene, Eurozone current account surplus narrows sharply in May. Those were the stories making today's CBX Evening News. On behalf of Nielsen Rose and the entire production team, I'm Yanil Wood, wishing for you a wonderful weekend, and thanks for watching CBX, your region, your business, your source.
Alphabet down 6, Microsoft down 5.
You're watching CBX Caribbean Business Exchange. Your region, your business.